Imagine watching your carefully curated altcoin portfolio crumble before your eyes. The value of your investments, once soaring, now plummeting as if the market itself has turned against you. What happened? Why are altcoins spiraling downwards while Bitcoin seems to dominate the headlines? The answer lies in understanding the cryptic yet critical phenomenon known as the halving crisis. This isn't just a downturn, it's a wake-up call. Today, we're going to dive deep into why altcoins are falling, what the halving crisis really means, and how you can turn this challenging time into an opportunity for long-term gains. Cryptocurrency markets are notorious for their volatility. The price of Bitcoin, Ethereum, and other altcoins can rise and fall with dizzying speed, influenced by a complex web of factors that can be difficult to untangle. Yet, despite this inherent unpredictability, one event consistently shakes the crypto world to its core: Bitcoin's halving. Halving is a pre-programmed event that occurs approximately every 4 years, cutting the reward for mining new blocks in the Bitcoin blockchain in half. This reduction in supply has historically led to significant price increases for Bitcoin. But what about altcoins? While Bitcoin often soars following a halving, many altcoins suffer, experiencing steep declines in value. This divergence can be baffling for investors who expect the entire crypto market to rise in tandem. Bitcoin's halving is an event ingrained in the very code of the cryptocurrency. Every 210,000 blocks, or roughly every 4 years, the reward miners receive for adding a new block to the blockchain is cut in half. This reduction in the rate at which new Bitcoin is created effectively decreases the supply of new coins entering the market. The fundamental economic principle behind Bitcoin's halving is scarcity. When the supply of a commodity is reduced, and if demand remains constant or increases, the price typically rises. This is exactly what we've seen in previous Bitcoin halvings, where Bitcoin's price has surged following the event. However, the impact on altcoins can be quite different. Altcoins are not directly affected by Bitcoin's halving. Their supply schedules remain unchanged, yet their prices can still suffer. Why? The answer lies in investor psychology and market dynamics. Bitcoin is often considered the gold standard of cryptocurrencies. It's the first, the most recognized, and, in many ways, the most trusted. During a halving event, as Bitcoin's price begins to rise, investors often shift their focus and capital from altcoins to Bitcoin. This shift can cause a sell-off in altcoins, driving their prices down. Additionally, the hype and media attention surrounding the halving often lead to new investors entering the market, typically choosing to invest in Bitcoin rather than altcoins. This influx of capital into Bitcoin further exacerbates the disparity between Bitcoin and altcoin performance during this period. Another factor contributing to the decline of altcoins during a halving crisis is the liquidity drain. As more money flows into Bitcoin, liquidity in altcoin markets can dry up. With fewer buyers, prices can fall rapidly, leading to a self-reinforcing cycle of selling pressure and declining prices. This isn't just a temporary shift, it can have long-lasting effects on the altcoin market. Some altcoins may never recover, particularly those that lack strong fundamentals or a committed community. For investors, this means that the halving crisis is not just a time of potential loss but also an opportunity to reassess and reallocate their portfolios. Once the halving event has passed, the market begins to stabilize, but the effects of the halving can linger. Bitcoin's dominance in the market typically increases during and immediately after the halving, as it continues to attract the majority of new investment. Bitcoin dominance refers to the percentage of the total cryptocurrency market capitalization that Bitcoin represents. During a halving event, this dominance often increases as investors flock to Bitcoin. As a result, altcoins, which make up the rest of the market, see their dominance decrease. This shift can have profound implications for the future of altcoins. Projects that rely heavily on investor interest and liquidity to sustain their value may struggle to regain momentum. On the other hand, projects with strong use cases, solid development teams, and active communities are more likely to weather the storm. The post-halving period often leads to market consolidation, where weaker projects are abandoned in favor of stronger ones. This is a natural part of the market cycle, where speculative excesses are purged, and only the most robust projects survive. For savvy investors, this is an opportunity to identify and invest in altcoins with real potential, those that offer something unique or solve a significant problem in the crypto space. Investors should pay close attention to the projects that continue to develop and innovate during this period. These are the projects that are likely to emerge stronger when the market recovers. On the other hand, projects that go silent or fail to deliver on their promises are at risk of becoming irrelevant. The halving crisis doesn't have to spell disaster for your portfolio. With the right strategies and mindset, you can navigate this challenging period and come out ahead. One of the most important strategies during a halving crisis is diversification. While Bitcoin may be the star of the show, it's crucial to maintain a diversified portfolio. This means holding a mix of Bitcoin, top altcoins with strong fundamentals, and potentially stable coins to mitigate volatility. Diversification reduces risk by spreading your investments across different assets. During a halving crisis, while altcoins may suffer, a diversified portfolio can help you weather the storm. It's also worth considering the timing of your investments. Rather than going all in before the halving, consider dollar cost averaging to spread out your investments over time. In a market driven by hype and speculation, thorough research is your best defense. Focus on altcoins with strong fundamentals, projects with real-world use cases, active development teams, and engaged communities. These are the projects that are more likely to survive the halving crisis and thrive in the long term. Look beyond the price charts and delve into the technology, partnerships, and development roadmaps of the altcoins in your portfolio. Understanding what you're investing in gives you the confidence to hold your position during periods of volatility. Market volatility can trigger fear and panic, leading to hasty decisions that result in losses. During a halving crisis, it's essential to stay calm and avoid making impulsive decisions. Remember that the market operates in cycles, and what goes down often comes back up, sometimes stronger than before. Having a clear plan and sticking to it is crucial. This includes setting realistic goals, knowing when to take profits, and being prepared to ride out the downturns. Emotions are the enemy of successful investing, so keep them in check and focus on your long-term strategy. The halving crisis is a test of your understanding, your strategy, and your resolve. While it may be a challenging time for altcoins, it's also an opportunity to refine your investment approach, identify strong projects, and position yourself for future success. In the world of cryptocurrency, nothing is certain except change. By understanding the dynamics of the halving crisis and taking a proactive approach to your investments, you can turn this period of uncertainty into a time of growth and opportunity. Remember, the true winners in the crypto market aren't those who ride the highs, they're the ones who navigate the lows with confidence, patience, and a clear strategy. The halving crisis is here, but it's not the end, it's just the beginning of a new chapter in the ever-evolving story of cryptocurrency. If you found this information helpful, please give this video a big thumbs up. Your support means the world to me and helps me create more content like this. Don't forget to leave a comment below, sharing your thoughts or asking any questions. And if you know someone who would find this useful, hit that share button. Together, we can grow this community and learn together. Thanks for watching, and I'll see you in the next one.